2025 is gone. 2026 is here. So what happened in 2025? How did your portfolio do? How did your market strategy do? And what are we going to do for 2026? Well, we break down exactly what we did and what we think is the right thing to do going into 2026.
We hope you've been enjoying all the episodes from Secure Your Retirement. If you'd like to keep learning and receiving these episodes, hit the subscribe button and the bell so you receive alerts when they come out. We've helped thousands of listeners get on the path to securing their retirement. Now it's your turn. Let's dive in.
Welcome, everyone, to 2026 for Secure Your Retirement Podcast. It's amazing that we're sitting here in 2026. It kind of blows us away every time we say another year, doesn't it? And certainly this has been a closeout now of 2025. And as we go into 2026, there's a lot of things for us to chat about. As you know, this is the first Monday of the month. And really what we've decided to do here on the podcast is on the first Monday of the month is really kind of talk about the portfolios, talk a little bit about the markets and where they've been and where they're headed, really kind of talking about the investments. We find that that's very, very helpful for us to kind of walk through. So today what we're going to do is we're going to talk a little bit about kind of a sum up of 2025, kind of some of the things that we saw in 2025, some of the results that came out of 2025. I think that's a really good thing for us to do also because it helps us when you're living through something, you think, man, is this ever going to work out? And this year, 2025 was a year to really teach us volatility can be there and things can look bad and then ends up pretty good. I also want to let you know that we are going to talk a little bit about how our portfolios design. It is designed to deal with really all of those possibilities. It's designed to deal with volatility. It's designed to deal with high interest rates. It's designed to be able to navigate to lower interest rates. It's designed to be able to produce income if that's what we want. And so we want to kind of make sure that you understand as we walk in here into 2026, don't know what's coming yet. We didn't know what was going to come in 2025. The portfolios worked really well in 2025. They've worked really well now for many, many years. How is it that it's designed? We want to kind of go through that a little bit. So, Merce, I'm just going to turn it over to you at this point. And if you can kind of start this conversation out around kind of what happened in 2025 and maybe, helping us remember, I guess, and to build our confidence that things do work out.
Right. Yeah. I mean, we walked into 2025, I think, with a lot of nervousness. We had an administration change and then a lot of policy changes that were up in the air, and then they came into fruition, and then which caused a lot of volatility. So there was a lot of promises around tax change, and then we got the One Big Beautiful Bill Act, the tax law that we're still kind of learning and understanding, but there's been some opportunities there to take advantage of as far as the extension of tax rates and everything like that. But that was a big deal when the amount of time spent getting that policy passed was a big deal. But that's now in place. Inflation was also a big battle that we've had for several years now, but finally some movement on it as far as some interest rate cuts that happened at the back half of 2025. As we started to see some of the inflation pressures come down, which is a good thing. But still not totally under control, but things are headed in the right direction there. But obviously, that also was a point of uncertainty and volatility created around that. Interest rates being a big deal. Mortgage rates are starting to come down a little bit, but not in lockstep with interest rate cuts. So hopefully we'll see some more of that in 2026. And the job market still, they kept saying pretty strong, but here in the back half of the year started to see some numbers around unemployment going up, and you're hearing more and more about layoffs. So, a big year of uncertainty, a big year of transition that we have experienced. And Radon, we talk about all these big high level items, but the markets actually did okay for everything that we're talking about. The markets did okay. Let's talk a little bit about that.
Yeah, I think that if you look back and and I think it's good for us to reflect from time to time, because if you do go back and you look at the way the year kind of started out and kind of how things were going for a little bit there, it was looking rocky, and the markets did have a pullback. And there was some nervousness in the air. around a couple of different issues that we don't need to rehash all of that. But then we started to see things come together and actually start to be positive. And then the year just kind of really kept going. We've had adjustments in interest rates. We were starting off the year at pretty good high interest rates. We've seen those interest rates come down. It did not blow the markets up like a lot of people thought it was going to. A lot of people thought that the markets will, as the interest rates go down, that's going to be the driver. That was really not the driver. We've had inflation being a problem that's been being talked about, but we've seen inflation come down into a reasonable rate. Now, there could be some arguments around that. Sometimes people say, well, when I go to the grocery store, it doesn't feel like inflation went away. But overall, big picture, we've seen that kind of come under control. We had a lot of folks that were worried about the markets, and so they wanted to make some adjustments. In fact, we believe that as you are entering into retirement in particular, or you're transitioning toward retirement, in retirement for a number of years, don't try to invest where you think that you're going to get the necessarily biggest return. That's sometimes a big mistake. I think what we learned a lot of each year, but this year was a big year of saying, wow, if I have my portfolio designed correctly, I don't have to sweat it so bad whenever these market corrections occur. Oh, and by the way, if I have it designed correctly and we have a really good close to the year like we just had, a lot of you made very, very good returns. And when you put those returns out there and say, hey, if we can make a good rate of return, we say this all the time, make a good rate of return and lower my risk, a couple of things is going to happen. I'm going to have a very good retirement. I'm going to have be able to sleep at night, and I'm going to be able to have the returns that I need. So I think if we kind of just really reflect on the fact that what we lived through this year was, I think, a lot, but when we look back at it, it's now not that big of a deal. But I think what I'd like to do, Merce, is kind of talk a little bit about maybe some of the things that you see coming that we know that are going to be big topics for 2026, and maybe just kind of thinking about maybe we can even do a playoff of 2025 of what happened, but really kind of what are some of the things that you think that we're going to see and we need to be ready for mentally for 2026.
Right, and I think what you said earlier about not trying to go hit those home runs. So I think a lot of people fell into 2025 being the big AI year, and let me go invest in AI and all these big AI stocks, and you can quickly get yourself into a place where you're very over concentrated in that area. So I think going into 2026, that's going to be something to pay attention to. Some tech stocks, some AI stocks. You hear this word of a bubble every now and then, and there's trains of thought as far as, are we in a bubble, or is this just a place that's going to continue to go up? The answer is nobody knows. So you always don't, you want to be in a place where you're not overexposed to any type of asset class, regardless of what it is. And like you said, trying not to go after these home runs, especially as we approach retirement. So that's going to be one to watch in 2026 is really market concentration. Are we having just a few key areas of the market driving the results, or are we starting to broaden out? We saw that in 2025. Outside of AI, we did see, the smaller companies, the mid-sized companies picking up some of the slack that they had back in the a few years ago. We also saw international and European stocks doing quite well because of a lot of stuff that was happening inside of the U.S. People were going to outside investments. So seeing that broadening out is a good thing. That speaks to the idea of having really good diversification in your portfolio being very important. Valuations, you've got a lot of companies that are worth billions and trillions of dollars right now that makes people nervous. So understanding where that heads, I think, is going to be important in 2026. And we're going to be walking into an election year, so government policy, politics, that could always create issues and turmoil and volatility in the markets. And the big one that we've been saying for years, we've started to get some rate cuts here in 2025. Does that continue in 2026? And what happens with Powell? Who replaces Powell? That's all going to be very important things as we walk into 2026 as well. And I don't think I mentioned in the 2025 recap, but tariffs was a big deal. You mentioned April being a big volatile year, portion of the year, and people got very nervous around the impact of tariffs. Well, I think we're going to start seeing truly from a dollar figure what those impacts are going to be in 2026 and how that affects the general economy in the U.S. But I think those are the big things to look at for 2026. So,
yeah, I was just thinking too, I want to kind of have you hit on this a little bit. I think as we have been designing the portfolios, we put a lot of thought into how they are put together. And we talk about all the time our simplistic approach of the three buckets. But I want to talk a little bit about that growth bucket because that's really kind of what the reference here is. And I think one of the things that we saw a big time value this year that we've really helped a lot of our clients in is our tax efficient portfolio. And I think tax strategy, we're doing a lot of tax strategy around a lot of different areas, but I think one of those is how we've designed, in particularly, just to give you context, this is for accounts that are not IRAs. Okay, IRAs, it doesn't really affect us, but I have a non-IRA account, a brokerage account, and I'm growing that money, and I had a big, nice year like we did this year, that can create problems. And the problem could be if I've got let's say I had a 20% gain this year on my portfolio, now I've got all this gain. Well, now how do I deal with that gain and not be hit so hard on the tax side? And so we've been talking about, I invest in what we're about to describe. I know that many of us are using these type portfolios. We have a lot of our clients in it, but could you talk a little bit about the importance of in the investment strategy, if it's a non-IRA, why we need to think about tax strategy?
Yeah. So non-IRA money, think about it. Maybe you just had some cash in the bank. You said, let me go buy some stocks, and you picked a winner. You picked a good stock. For a lot of people, that's your NVIDIAs, your Apples, your Microsofts, your Googles that have appreciated significantly. And what Raiden was alluding to is that, well, if I get a stock that did very well, now I feel handcuffed to it because I'm worried about the tax implications of trying to get out of that stock. So capital gains is the key word here. Well, what if there was a way to manage capital gains a lot smoother? Also, what a lot of people do at the end of the year is this thing called tax loss harvesting. They wait till the end, so December, and say, hey, do I have any losers in my portfolio that I can offset some of the gains with or sell some of my winners to at basically a net zero type of capital gain? I sell for a loss and I sell some of my gains, and it doesn't cost me anything. So what we say is, well, why not do that throughout the year rather than at the very end of the year, at a last ditch effort for some tax planning. And so this strategy is called direct indexing with tax loss harvesting. And it's got two goals to it. One is to mimic an index. So think about maybe the S&P 500 as one of those indexes. So we want the movement of the index itself by using stocks inside this portfolio that replicate the movements of the index, but we're not buying all 500. We're buying somewhere in the realm of, say, 50 to 75, and we get the bulk of the movements of the index itself. So that's step one. Step two is now because we have 50 to 75 stocks and not just one fund that represents the index, now we've got a little bit of a playground because not all stocks go up at the same time. So throughout the year, while some are leading the pack, there are going to be some losers in there. Not all stocks in the S&P 500 go up at the same time. And so we can optimize and sell some of those losers while the winners are winning, and we keep things in balance. We keep stocks from running away from us on a growth pattern. And so we're able to keep those winners in check. We're able to keep our index in balance so that we're never getting to a place where we've got over concentration like your Apples and your NVIDIAs and Tesla stocks and things like that. So long story short, it's a really nice way to optimize the taxation of this vehicle to where you're building up some losses, you're managing capital gains, and in the perfect scenario, you get some of those losses to help out your tax return year over year. And what that generates is what we call tax alpha. The big picture here is that it's not about how much you make, it's about how much you keep. And a lot of times we lose a lot of those dollars towards taxes if we're not managing it properly. So it's a very cool strategy that we use. We've done a whole separate podcast on it that if this sounds interesting, then you want to go back and look at that podcast as well.
Yeah, and I think another big thing to consider is in our three buckets, we've got the growth bucket. There's a lot that we have in the growth bucket that has worked really well. We always talk about the fact that we've got the tax efficiency. We've also got in there what we call a tactical portfolio, very much driven off of what's actually occurring. It can make a different or a quicker move, let's say it that way, based on what's happening in the market. And then we have our core portfolio. The core portfolio is really designed to look far out and stay really kind of invested, looking out into where we think things are headed. And then we actually have what we call alternative investments or private investments. Very, very important to have those in the portfolio, we believe. And the reason why is because we reduce the volatility in the portfolio. We get to be a part of things that's going to give us really good rates of return. And it's easier today than ever to get involved in private investments than it ever has been. And the rules around it have lightened a little bit too, which opens it up for quite a few individuals that couldn't in the past get access to them. So we have just really enjoyed being able to have that as a part of the portfolio. And when you put all those things together, you can have good growth, lower volatility, and that's really what our goal is. Now, we also need to just take a couple of minutes and talk about that other bucket, which is our income safety bucket. And this one, absolutely key if I'm close to or in retirement. This one is the one that takes all the pressure off and really kind of builds out this idea that I can live through some volatility and it's not going to affect my retirement. Why? Well, if I've got things set up in that income bucket that is going to give me the income I need, or it's going to give me stable growth with no downside based like on what the stock market is doing, I can rest. I don't have to think about or worry about if my growth bucket's going through a little bit of volatility. Take the first of 2025. If I've got my income safety bucket there, that volatility that's happening over on the stock market side, not a big deal. Now, what happens after you have a really good year on the growth bucket? You rebalance and you take some of that growth money that's been over there that grew really nice and you replenish your income safety bucket where you were taking income from. We did a lot of that in 2020, coming out of 2024. Probably going to have to do a little bit more out of it this year just because of the growth that has occurred. That we're constantly looking at that and saying, how do we position it? But I don't know, Merce, do you have anything you want to talk about on that, or just kind of, I don't know, add something to on that?
Yeah, I think when you talk about the safety and the growth bucket, I think the two major key things come out of having both of these in place. One is that it puts us in a place of being able to really manage risk and have predictable outcomes from a downside perspective. You know, a lot of the families that we work with, they say, hey, you know, I survived 2008, and that 2008 was a significant decline, 30 to 50% loss, depending on how you invested during that period. And I survived that. I don't want to live through that again, especially as I get to a place where I need my money. So a lot of our clients don't want to be down any more than 5 to 15% in a given year. And so having this combination of principal protection on one side of our investment strategy and then long-term growth on the other side, we're able to balance out risk and really get targeted towards what our downside is. And I think the other part is that it buys us time at the end of the day. Having the safety bucket, the place where we're going to draw money from, we're never worried about it being down. We're never worried about getting our $2,000, $3,000 a month out of this place, allows for volatility to happen and long-term growth to happen on the other side. Because now, if we are down on the other side, we're not as worried about waiting for it to come back because our income flow is coming from a completely different side of the portfolio. So it manages risk really well, and it reduces stress, which is a big thing when it comes to retirement planning for people. Where am I going to get my money from? Is the market down? Do I need to swing for the fences? It takes all those conversations out of your head and lets you really enjoy your retirement. So we know it works well for the families that we work with, and if it's something that you'd like to talk about, we're happy to do that too.
So let's sum it up this way. How do we feel about 2026? I'm excited. I think it's going to, regardless of what this market brings toward us, we've got systems in place to help our clients. If you are listening to this and you're not a client and you want to talk about those systems, it just really does put you in a position where I don't have to sit here and think, oh man, this is going to be a fantastic year from a stock market perspective. No, we've got everything in place that no matter what this market brings us, we at least have places to go and things to do to make sure that we're going to navigate the year. So we're super excited. As Merce said, if you ever do want to have a conversation, feel free to go to our website. It is pomwealth.net. Go to the contact us page, reach out to us. We'd love to be able to have a conversation. We hope you are looking forward to 2026 as well. We'll talk to you again next Monday. We hope you have enjoyed this episode of Secure Your Retirement. If you would like to learn more, we have actually created an online course called 3 Keys to Secure Your Retirement. This video course helps you to think through all the different steps as you get ready to plan for and live throughout retirement. You can access this by going to our website, pomwealth.net. In addition, you can also subscribe below to our podcast called Secure Your Retirement.
For more retirement tips, check out these videos. Also, if you find them valuable,
please subscribe to our YouTube channel and give us a like.